Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we'll take a look at Forex trading on Aussie Kiwi, WTI and Brent crude oil. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered as trading advice. And don't forget to like, subscribe, and keep up to date. Over the weekend, the markets caught wind of a possible truce talks or peace talks over the Iran war, and price action on WTI opened lower with the gap. If this were a traditional trade, we would call this a gap trading and assume that price would rise to fill the gap. However, during a geopolitical crisis like a war, technical analysis may not be so reliable. If peace talks break down, as they have so far in this conflict, we could see the gap being filled quite easily. Good news, especially about the Strait of Hormuz, we'll see prices falling. If you do like the technical aspects of trading crude oil, just like any other instrument, follow the trend. You can see here where technical indicators, like the stochastic oscillator, can pick reversal points. You can see even today where this happened and prices are rising already. Just keep an eye on the news. Of course, we're getting almost identical price action on Brent crude right now. The only difference now is that spread between WTI and Brent is at about $5, which is normal. Just earlier today, the spread was around $3, so there are opportunities to trade the volatility. Tomorrow we have a CPI announcement from the Reserve Bank of Australia, and analysts are predicting a fall in inflation. Then literally 1/2 hour later, we have an interest rate decision from the Reserve Bank of New Zealand. We may get a surprise here, as the New Zealand dollar is one of the weakest currencies. We can see from the weekly chart on Aussie Kiwi this year-long progression of one-way price action. So in 1 year, the cost of one Australian dollar has gone from $1.06 to over $1.22, which is not great for a country with high inflation. Let's see if the central bank can reverse the trend. We see where we are today with price action trying to break resistance and a very overbought stochastic oscillator. Whenever we see two news events coming out at the same time, this often gives us an opportunity to trade both currencies in the pair if the news from one goes contrary to the other. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.